The internet makes it seem like if you're 25 years old and you don't have $1 million in your bank account and you're not driving a Lamborghini, then you're a financial deadbeat. But that's not how it works in the real world, which is why in today's episode, what I want to do is I want to go over 15 signs that if you are doing these 15 things, you are doing better than what you think financially. And number one is you are self-sufficient, meaning you're not relying on your parents to pay for your rent. You're not relying on your friends to pay for your food. You're not relying on your family members to pay for your groceries. And you're not relying on the government to pay for your housing or anything else. If you are earning money from your job or your business or whatever it is, and you're using this money to pay for your lifestyle, well, you're not doing too bad because now you are self-sufficient and you're not sucking money from somewhere else in order to just pay your bills. And this one probably seems really obvious, but the first step to really taking any sort of step towards financial success is taking responsibility for your own finances. Because if you're constantly just sucking money out of something else, you're constantly relying on somebody else, whether it's your family or whether it's the government to take care of you, it is going to be impossible for you to ever achieve any sort of real wealth because now you're constantly just relying on somebody else to keep feeding you. And if you're relying on somebody else to give you money so you can go out and live a lifestyle, you're never, ever going to have a chance to become wealthy because you're constantly reliant on somebody else. So the first thing, if you want to be wealthy or if you want to have any steps towards wealth, is you got to be self-sufficient by yourself. Number two is your home is not a money pit. And this is an interesting topic, especially now because we've seen the craziness in the housing market. Well, many people assume that your home is the biggest asset that you can ever invest in. It's the most important investment that you can ever make. It's how you build generational wealth. But the reality is your home is a liability until you go out and sell it. And then you have to hope that you can sell your home for a profit. Now, can you make money in your home? Absolutely. Is it nice to own a home? Yeah. Is it great to own a paid off home? 100%. But before you go from where you are today to actually owning a paid off home or selling your home for a profit, that home could be a huge money pit that's sucking away the opportunity for you to actually build any sort of real wealth. In fact, studies have shown that most Americans who bought a home in the last few years have regrets when it comes to buying a home. Let me actually read you the statistic. More than half of home buyers, 56% of them, have felt in over their heads financially since purchasing their home. And almost 2/3, 62% of Americans who bought a home have struggled to make mortgage payments on time. And additionally, more than 1 in 4 recent home buyers claim that their overall financial situation, this is 27% of home buyers, and their debt burden have gotten worse since purchasing a home. So more than 50% of Americans who bought a home feel financially stressed because of their home. And a quarter of Americans who bought a home recently feel that now they have to go into deeper debt to be able to keep financing their lifestyle. So if you have a home, I don't care if you're renting a home or if you're owning a home, and it is not a money pit, meaning it is not taking away your ability to invest in other places. It's not taking away your ability to save. It's not taking away your ability to build any sort of real wealth. You are winning financially. I don't care if you own a home or renting a home. If you are living in a home that's within your means, which means that now you own or you rent this home and you're still investing money, you're still saving your money, you are winning financially because you are not spending your money in this money pit in a way that's just going to make somebody else, whether it's your broker, whether it's your mortgage banker, whether it's whoever, richer. Number 3 is you pay your bills on time. Right now, about 61% of Americans are living paycheck to paycheck, meaning you have zero remaining dollars left over after you get your next paycheck because as soon as you get paid, you're working to just pay back all of your bills. And now sometimes when you're living paycheck to paycheck like this, or many times what ends up happening is now you have to be very cautious with your spending because if you spend an additional $100 on accident, now you might have to take a little bit longer to pay that cell phone bill or wait until your next paycheck to write your rent check. But if you can pay your bills comfortably on time every month, you are ahead of the game because most Americans today, and I'm not just saying most in a general term, I'm saying most as in more than 50% of Americans today are struggling to just pay their bills on time. And so if you are living within your means in a way that now you can pay your bills on time comfortably, you are winning in the game of money. Number 4 is you are working to pay down your consumer debt. And the reason why this one is so important is because, well, most Americans make money and then they spend it, and then they continue to spend money, whether it's with their credit card or a home equity line of credit. They continue to spend money with the help of debt until you can no longer keep spending money. So you spend, and then you hit this breaking point, not because you realize, oh, maybe I should stop spending so much money that I don't have, but because your bank or your credit card company says, you can't keep spending more money, now you got to pay us back. And then you start to see the spending slow down because now people feel like, man, I can't keep spending my money. My annoying bank, my stupid credit card has said that I spent way too much money. Now they're not giving me any more credit. And now you have to cut back on that debt and you have to work to pay down the debt because your banker or your credit card company forced you. But if you stop this spending before you get told so by your banker or your credit card company, and then you're working to pay down this debt because you voluntarily chose to say, you know what, I don't want to just keep going deeper and deeper into this consumer debt. I don't want to keep going deeper and deeper into credit card debt. I don't want to keep going deeper and deeper into just spending money to make everybody else rich. You are ahead of the game, because what happens to most people, I'm not just saying this generally, I'm saying this statistically, most people will continue to spend money they don't have until their banker tells them no. And by then, it's too late. Now you have to make serious sacrifices. Now your credit score takes a hit. Now everything in your financial life and your family's life gets hurt. But if you realize this before it's too late, you are ahead of the game and you are winning financially. Number 5 is you have $1,000 sitting in the bank right now. If you have $1,000 sitting in the bank right now as an emergency fund, extra cash that you just have there just in case of an emergency, you are better than the majority of Americans financially. Now, again, I'm not saying this generally, I'm saying this statistically, because right now, 57% of Americans have less than $1,000 saved up for an emergency, meaning for more than half of Americans, if something happened to your car and that car bill was $1,300 to fix that issue, more than half of Americans would have to go into debt to fix that problem. Which is why if you have $1,000 sitting in your savings account right now as an emergency kind of cash pile, well, you are winning financially. Now, you don't want to stop here. I like to say that you need to have a minimum of $2,000 saved up in your emergency savings, and then you need to continue to work to build up the savings until you have somewhere between 3 months to a year's worth of savings saved in cash for emergencies only. But you got to start somewhere. You got to start with the first dollar, then your first 100, then your first 1,000. And if you have $1,000 saved up, well, you're beating half of Americans financially. Now, if you do not have the $1,000 saved up, this does not mean that you have lost in the game of money, but it means you got to get serious about your money, because the reality is it costs money to eat and it costs money to feed other people. It's very easy to create smoke screens around this topic of money that, oh, money's bad, money's evil, money's taboo, you shouldn't worry about money, money's only for rich, greedy people. You can say that all day and night long, but at the end of the day, hugs and kisses are not going to pay your credit card bill. So if you are struggling with money, if you do not have any sort of financial systems built, it's okay. I want you to take a breather and understand that you can get out of whatever financial situation that you're in, but that means you're going to have to start putting work towards fixing the problem. And that starts by you making some financial sacrifices, cutting down on some of your spending, working to earn more money, but then not spending the money that you're working to earn now. You got to take this money, you got to pay down some of the debt, you got to build some savings, and you got to start investing your money, because that's how wealth is built. But that starts with you taking your first step now and actually realizing that, okay, I got a problem. I have a financial problem. I don't have any savings. I'm drowning in debt. I don't have any investments. I need to do something about this. And that's where the financial education starts, and I have a ton of videos on my channel. But let's keep going, because number 6 is you don't feel the urge to fake it. If you own any designer clothes, Gucci, Louis Vuitton, or you own a BMW, or you own a fancy watch like a Rolex, but you don't have the same amount of money that you spent on this luxury in the stock market, or if you don't own a rental property, your priorities are in the wrong place. Because what you see happen is people will be very comfortable spending $1,000, $2,000, $5,000 at the Gucci store. But when it comes to spending $5,000 into the stock market or $5,000 into an investment, now it's like, whoa, what happens if I lose my money? What happens if the market goes down? What happens if the economy crashes? What happens if I lose my job? What happens if the company that I invested in goes bankrupt? But you miss the whole point and the whole strategy around the chance of actually being able to build wealth with that money, because when you go and spend $5,000 on the Gucci, that $5,000 is going in the garbage. Now, look, there's nothing wrong with owning nice stuff. There's nothing wrong with having designer stuff. There's nothing wrong with having luxury stuff. I want you to have that stuff if you want it. But you got to make yourself rich before you go out and you make Gucci rich. Do you know why the CEO of Louis Vuitton is one of the richest people in the world? He's either the richest person or the second richest person or the third richest person. It just depends on the day. But he's one of the richest people in the world, if not the richest person in the world. It just depends on what the day is looking like. It's because people are willing to spend money to look like they're rich, buying the Louis Vuitton before they're actually rich. And so now, when you are working hard to make money, are you working hard to make Louis Vuitton rich, or are you working hard to make yourself rich? Because that salary by itself isn't going to make you rich. You got to take that salary and do something with it. And when I say do something with it, I don't mean take that money that you just earned and turn it into a handbag or turn it into a belt or turn it into a fancy car. I mean, turn this money that you earned into an income-producing asset, something that's going to keep spitting off cash to you every month, every quarter, every year. That way now you're working to make money, and all the money you're making is making you more money. As opposed to you're working to make money, you take the money that you're working to earn and going out and buying a handbag. One of these things is going to make you rich. One of these things is going to make somebody else rich. And when you keep working to make everybody else rich, well, you are stimulating the American economy, and the American economy loves you. But if you want to make yourself rich, you got to be the one that's working to earn money. That way now you're buying assets. That way now you own the things that are being sold in the economy. That way you can be the one that's getting rich as the economy is growing. Number 7 is you avoid consumer debt. And this one is getting harder and harder day by day because, number 1, we live in a consumerism culture. If you live in America, well, guess what? Our entire economic system is designed to get you to spend money. Our entire financial system is designed on you open up your wallet and swiping your credit card or your debit card. Now, this doesn't necessarily mean it's a bad thing. This means you have to understand the system. Because if you understand it, well, this economic system can make you very wealthy. But if you don't understand it, you're the one that's making everybody else rich. And this is why it is so important for you to understand the importance of living within your means. Because the reality is you are working to earn money. And as soon as you work to earn money, banks look at you and say, oh, okay, you're making $60,000 a year. Not bad. How about we give you a new line of credit? How about we give you a new credit card? How about we give you a home equity line of credit? How about we give you whatever type of loan that would now you can go out and spend $100,000 a year instead of just 60, because now you got this debt, which means you can spend more money. Now, are there ways that you can use debt strategically to earn more money? 100%. But that's not going to happen by you financing a BMW. It's not going to happen by you putting money on your credit card to go out and buy your groceries or to buy a vacation. That's not going to make you rich. That's making your credit card company rich, and that's making every company you spend money at rich. When you go out and you spend money to make yourself rich, when you go buy investments, it's a completely different game. But that's not what I'm talking about right now. When you go out and you keep spending consumer debt, meaning you're financing things because you don't have the money to buy whatever it is that you want, well, now you're making somebody else rich with money you don't even have. And now it's becoming easier. Before, it was, yeah, you could get a home equity line of credit. Yeah, maybe you can get a credit card. Now, not only has it become so easy to get a credit card that you can get approved for a brand new line of credit in 15 seconds, every single store that you shop in has a store credit card that you can get easily approved for in a minute or less. But now you have buy now, pay later, or as I like to call it, broke now, broke later, which means you can buy whatever you want and just worry about the price later. And you can pay it back in installments and not have to worry about that whole pain of paying the $500 today. You can buy your groceries and buy now, pay later. And now anything you want to shop for online, you can just buy now, pay later. And you might say, but Jaspreet, buy now, pay later is 0% APR. How is that a losing transaction? I'm getting free money to shop. Now let's think about this for a second. Is there a cost for money? Yes or no? And if you don't know the answer to this, I want you to go to the bank and ask to borrow $100. Are they going to give you this money for free? No, they're going to charge you interest. It doesn't matter if you're borrowing this money to buy a home, to buy a car, or to put it on your credit card. They're going to charge you interest. They're going to charge you money if you want to borrow that money. So if banks have to charge you money to borrow money, how can buy now, pay later companies or any 0% APR program give you money for free and have you pay it back in installments? There has to be a cost for it, right? And you are 100% correct. There is a huge hidden cost with buy now, pay later that most people don't understand, because the reality is buy now, pay later is very, very, very profitable. And the reason why it's so profitable is because, number one, businesses know that if they can get you to spend more money today without feeling the real pain of your spending, you're going to spend more money. Because now, if you want to buy a $1,000 phone, but you can just pay it off in $60 a month, well, now you're going to be much more likely to buy the $1,000 phone, because now you don't have to see $1,000 leave your account today. All you're going to see that's leaving your account is $60. And now people say, but then I can invest the other $9,000 and whatever money, because now I have $9,000 in my pocket that I can keep investing. But guess what? 99% of people are not doing that. So the first thing is, businesses know that you are going to be spending more money, buying more stuff, because you're doing buy now, pay later. And then the second thing is, because you're buying more stuff, what ends up happening is there's a chance you might not be able to make your payments on time. And now, if you cannot pay it off in the 16 months that you thought you'd be able to pay it off, now you get slapped with a little fine of 25% interest. Now you are paying all the interest for everybody else, because you thought that you could win in the system by spending more money that you have. If you want to break out of the system, start buying the things that you don't need to survive with cash. Start buying the things that aren't making you any money with cash, and make sure you buy the full amount up front. The only exception to this being your house and potentially your car if you wanted to lease it. But I don't like talking about this, because leasing your car is, think of it like flying first class. It is a huge luxury. It is a huge premium. And the only people that should be leasing cars are people that have a ton of money. Now, if you want to lease a car because you want to go out and buy a $300,000 Lamborghini and you don't want to have to deal with the maintenance and you just want to drive it around for 12 or 18 months to give it back after a couple of years, fine. But this should be such a small amount of your monthly income that it's a negligible amount of money. So if you want to lease a car, fine. But this is something that's like flying first class. Think of it like it's just a luxury. You're just spending dumb money. And if you want to do that, that's fine. But for the average person, leasing is a financially losing transaction. So when it comes to spending money on things that don't make you any money, you got to make sure that you're buying it upfront with cash. That way you can actually afford it. Yes, it is more difficult. Yes, you're going to have to make more sacrifices. And yeah, that means you might got to cut back on some things. But if you can start doing this, well, now all of a sudden, you are going to have the ability to live in a way where now you don't have to keep making payments month after month after month, and you're not working next week to pay back yesterday's bills. Because when you keep spending money you don't have, well, now you are working to pay back yesterday's, last week's, last month, and even last year's bills. And when you're constantly working to pay back last year's bills, you never have a chance to build tomorrow's wealth. And so if you want to build tomorrow's wealth, you can't keep paying back yesterday's bills. Number 8 is you have invested your first $100. Here's the reality. Half of Americans have $0 invested for retirement. That means $0 put away for their retirement savings, $0 put away in a 401k or an IRA, $0 put away into the stock market, $0 put away into the real estate market, $0 put away into physical gold, and $0 put away into any other alternative asset to fund their retirement. Half of Americans have zero put away towards their wealth. Now, whether or not you want to talk about retirement, I'm not personally a huge fan of the traditional retirement, but the reality is you have to have money put away for your wealth, for your financial freedom, for your retirement, whatever you want to call it. And the first step to doing that is investing your first $100. And so if you have started by putting $100 away into any investment, I don't care what it is, you are winning. And this is something you need to keep accelerating. Now, you don't want to just stop at $100, but that is the most difficult part, getting started. Because in order to get started, that means now you have to learn what it means to invest. Most of us don't even get this far. When we learn about investing, what is financial education? What is this whole thing about putting our money to work? Because most of us don't grow up with parents telling us to invest your money. We grew up being told, go to school, get good grades, get a job. And that's where it all kind of stops. Then maybe you get into a company where they give you this pamphlet saying, hey, do you want a 401k? You ask your colleagues and everybody says, yeah, you got to get a 401k. And sometimes people follow that, which is a good start. But that's not where your financial education should end. Your 401k is really the absolute floor, the absolute bottom of getting started in building real financial wealth. But that means you got to start by investing your first $100. And that starts by now, number one, learning what is financial education, learning about investing. Number two, actually getting started, opening up a brokerage account or going out and taking action. Number three, funding it. And then number four, making an execution, whether it's buying a stock, whether it's buying a rental property, doing something, putting your money to work, because that's scary. That's $100 that you work to earn, and you don't know if you're going to ever see the $100 again. At least with the Gucci bag, you can see the Gucci bag, right? But that Gucci bag isn't doing anything for you. This $100 can actually grow into something much bigger. But now, once you invest $100, I don't want you to stop there. You got to keep funding it, and you got to keep putting more money into it, and you got to keep learning, because yes, you're going to make mistakes, but experience is the best teacher that you can have. Those mistakes are going to teach you what not to do and what to do, because as you learn what not to do from all the mistakes that you make, that's going to show you what you should be doing. But if you want to ever have a chance at becoming wealthy, you have to put that money aside, and you have to put this money to work. Number 9 is you are willing to invest money into yourself. It's kind of interesting. You will very easily and very comfortably see people throw $500 a month into their car payment. I will easily and comfortably, without any questions, put $500 into my car, plus maintenance, plus insurance, plus gas, because, well, I got to have the BMW. I got to have a decent car, right, to get to and from work. And so you will see Americans easily, without a question, put $500 a month into their car. But if it comes to putting $500 into yourself, and I'm not talking about putting money into the stock market right now. I'm talking about putting it into your brain by buying books or buying classes or investing in seminars, going to conferences. Now it is a whole world of questions of, what type of return am I going to get on this $500? How much value am I going to get out of this $500? Will I actually get my money's worth out of this $500? I don't know if it's going to be worth it for me. For $500. We're spending $500 a month on a car payment every single month, right? But when it comes to spending the money in your brain, now it is, what types of return am I going to get? Here, let me tell you something. When you put that $500 into a car payment, it is going to zero. You're getting zero return on that because your car is a depreciating asset. If you put that $500 into books, into courses, into seminars, into going to conferences, now you are changing your mindset. You're changing your brain's environment. You are going to be learning something new. And not only that, you also might be being able to meet other people. And now when you meet other people, now you can start getting other ideas and seeing how other people are doing things. Maybe you realize, oh, wow, I never even heard of this idea of investing in storage properties. That's pretty interesting. Oh, wow, I never knew about investing in emerging markets. Oh, wow, I never thought about investing in dividend ETFs. That's interesting. And now you start to meet people. You start to learn how different people earn money. And now you take your brain out of the current environment that it's in and you plug it somewhere else. And there are so many ways to do this. One is virtually. You're reading books, you're watching classes, you're doing things on your computer, which is great. Now you're changing the environment that your brain is in. But you also need to change the environment that your body's in. And I learned this because I never really traveled much when I was growing up. I used to go to India pretty often. That was pretty much the extent of my travel. And I went to Cancun a handful of times. But that was really it. I would go to India to visit my family, and then I got to go to Cancun a few times. That was cool. But I never really got to see much more besides my home in India and Cancun. But then, as I got older, I started to travel a little bit more. I went to California for the first time, and I was like, whoa, there's mountains. This is really beautiful. Then I saw New York. Wow, there's a lot of lights here. And I saw different parts of the world, and I started meeting different people. And I mean, in the United States. Then I started traveling internationally. And I started meeting business owners internationally. And I started to realize, wow, people in Europe think very differently than the people in the United States. Business owners in Europe operate very differently than business owners in the United States. And not just that, business owners on the West Coast of the United States operate very differently than the business owners on the East Coast. And so as you start to explore and take your mind out of the environment that it's in, you naturally absorb different things. And the first way to start doing that is just to change the environment that you're spending your time in. And that means reading books, watching YouTube videos, listening to podcasts, buying classes, buying and going to seminars, going to conferences, because now you are changing the environment that you're in. Now, every person is going to be kind of attracted to different types of things. Personally, I'm not a huge fan of most conferences because it's just kind of like this networking fest that I don't like. I'm not a big networker. I hate that type of traditional networking. But there are certain conferences that have been super valuable for me because it's a completely different game. When I'm going there with a certain caliber of people and it's a smaller environment where it's not one of those traditional conferences where you have hundreds or thousands of people just running around trying to hand you a business card, I don't like that. But some of the smaller conferences where you have to pay a lot more money to go to, and now you have 10, 15, 20 people there and everybody's there with a purpose to meet each other person, now it's a very different game. And there are certain types of places where you can go to kind of find what you like. But the whole idea is you got to be willing to invest in yourself. Yes, you got to invest the time, but also the money, because you have to keep educating and watering your brain. You got to keep teaching yourself and keep learning. That way you can learn not only different ways to earn money, but different ways to use your money. And that's not just by listening to somebody else tell you, but also by just talking to people and seeing what other people are doing. Number 10 is you do not have any sort of credit card debt. This is from the American Bankers Association. Americans carried a credit card balance on 56% of all active credit cards in the third quarter of 2022. That means the majority of credit cards out there, more than 50% of credit cards out there have a balance on them, which means the majority of Americans who have a credit card are currently in credit card debt. Now, I love credit cards, and the reason why I love credit cards is because I get cash back, I get hotel upgrades, I get flight upgrades, I get a bunch of perks. But I also never, ever, 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 ever pay a penny in interest. If you are carrying a credit card balance, you are using your credit card the wrong way. Not only are you making your credit card company rich, but you're paying for everybody else's perks. You're paying for everybody else's rewards. A credit card is not worth it if you are carrying a balance. So if you have a credit card and you're carrying a balance, you got to stop using the credit card and you got to pay down the credit card debt as fast as possible. But if you're using credit cards and you're getting the perks without paying the interest, you're winning in the game of money and credit cards. Number 11 is you value your time. And this one has become a lot more, accessible after the pandemic, because after the pandemic, people stopped wanting to do things that were a waste of time. People stopped wanting to go to the grocery store. They stopped wanting to pick up their food. They stopped even wanting to go to the office. But what you have to do if you want to become wealthy is you got to value your time. And there's a lot of different ways to do this. And one way is really just to now think about how much is a time worth? If you are worth, let's just say $20 an hour, your time, can you get something done for $15 an hour and save yourself an hour? Because if you can pay somebody $15 an hour to wash your clothes and you can work during that time and earn $20 an hour, well, you just made a $5 spread. So now the question is, how are you valuing your time? Because the reality is the most valuable and limited and scarce asset that we all have is our time. That's one thing that we cannot get back. It doesn't matter how much money you have. And so if time is your most valuable asset, the question is, how can you buy back your time? Because if you have more time, not only can you work to earn more money and invest more money and do more things to build you more wealth, but you can do more things that make you happy and be more free and do more of the things that you want, which means you got to get back your time. And in order for you to do that, you have to value your time. And that means right now, you got to be thinking about different ways that you can buy your time back. Now, of course, if you have free time where you can't work to earn more money and you don't have anything else to do, well, now, sure, you can do your own groceries. You can make your own food and do all of that stuff because you paying somebody else is just an outflow of money. So you got to be logical with it too, because in certain stages of your life, you got to keep as much money as possible, but you got to value your time and stop wasting your time. Another big time suck is Netflix. And I talk about this a lot. And the reason why is because there was a study done in the United States that says that the average American is spending almost 3 hours a day watching TV. 3 hours. That's 1,000 hours of TV time a year. If you reallocated that TV time, that Netflix time into learning, into building a business, into building your income, into learning how to invest, in a couple of years, you could completely turn around your financial situation and completely turn around the way that you look at money. But that starts with you valuing your time. And so, if you're using your time in a way that you're not just killing brain cells, and you're not just wasting your time doing something that you could pay somebody else to do, well, you're winning in the game of money. Number 12, this one's a little bit more difficult, but you have earned at least $1 in cash flow. I'm a cash flow investor. I love investing for cash flow, and that means now you own an asset, and this asset is paying you just for owning it. What are some examples of this? Well, this could be a dividend-paying stock. This could be a dividend-paying ETF. It could be a dividend-paying index fund. It could be real estate rental properties. When you own one of these assets, now you get paid for doing nothing except owning the asset. And you don't need a ton of money to start. You really can get started with less than $100. But the difficult part about this is having the patience. Because when most people start investing for cash flow, they say, if a stock is paying a 3% dividend, that means I have to invest $100 to generate $3 over the course of a year. That's not a lot of money. And you're right. $3 is not a lot of money, but you only invested $100. If you keep investing $100 a week over the course of 10 years, now it's $3 on every $100 that you invest. And now as you start to generate that cash flow, you can reinvest that cash flow and generate you more cash flow as well. So now you're investing $100 a week. Every week you do this month after month after month, year after year after year. And as you generate the cash flow, you keep reinvesting the cash flow. Now you can start to see the cash flow starts to stack. But in order to get to the $1,000 a month or the $10,000 a month in cash flow, well, you got to get your first $1 first. So if you received $1 in cash flow, you are winning in the game of money, because right now half of America hasn't even started investing, let alone started investing for cash flow. But that's where true freedom is. When you can start getting the cash flow, and this cash flow can fund your lifestyle, now you have achieved true financial wealth, because now you can spend your money and get another cash flow check next month or next quarter, and now you can just keep spending money, and you don't have to worry about working to earn that money, because you've already owned the assets. You've already bought the assets that will pay you for doing nothing except owning the asset. Number 13 is you do not have a car payment. I know this one is hard. I like nice cars. I like BMWs. I like the fancy luxury cars. And as soon as anybody leaves college and you start working, what do you want to do? You want to get yourself a nice car. But the reality is that car payment is a money pit. Not only are you paying interest, but you're paying interest on a depreciating liability. This car is going to lose money. As soon as you take that $50,000 car off of the lot, it's going to be worth $42,000 in the seconds that you put in the keys and drive it off of the lot. Immediately, it's going to lose about 20% of its value. Why? Because that car is a depreciating asset that has a certain lifespan. It can only be driven for so long. So now, as you drive the car, it's becoming less and less valuable. As the car becomes older, it's becoming less and less valuable. And on top of that, you're paying interest to finance that. And now you might think, but Jaspreet, cars are expensive. How am I supposed to afford a car without a car payment? Well, when you wanted to buy that $50,000 car, you had to put down some cash. You might have had to put down $8,000 to finance that $50,000 car. If you take the $8,000 and use it to buy a car with cash, well, now you own a car without the car payment. It's not a BMW, but it might be a used Toyota Corolla, and now this used Toyota Corolla with 70 to 80 or 100,000 miles on it is going to be now in a good working condition. You don't want to buy a bad working condition car. This is the car now that you can take to work. Doesn't look as nice, but now you can take that $500 a month that you were putting towards the BMW and put that towards your investments. I know this is hard. I'm still driving a beat down Toyota today. I make good money. I have a good income. My business is generating good money. My employees drive better cars than I do. But I am working to build the business. I am working to accumulate more rental properties. I am working to accumulate more wealth because that's more important to me right now than a car. I'm going to buy myself a nice car. Don't get me wrong. I'm probably going to buy myself a newer car at some point in the near future. But that car, I know, is a money pit. And I don't want to just sink. I could go to the store tomorrow and buy myself a $150,000 whatever. But the $150,000 has way more value in my business. It has way more value buying real estate. But the key is you got to know what's more important to you right now. Is it the car or is it the rental property? Is it the car or is it building that wealth? Is it the car or is it cash flow? And this is a difficult thing to answer because you can't show off the cash flow or the rental property the way you can your BMW. But one of these things is going to build you real wealth. The other isn't. Number 14 is you are contributing to your wealth every single month. And that means you're putting a little bit of money into your savings account and you're putting a little bit of money into your investments every single month. And it doesn't have to be a little bit. It could be a lot of it too. But if at the very least, you're putting a little bit of money into your savings every month and you're putting a little bit of money into your investments every month, you are winning financially. Because the key to building wealth is consistent investments. Small, consistent investments, week after week after week, no matter what. If you keep doing that, you are following the recipe to become wealthy. Because the difficult part is sticking with this investment strategy when your friend's having a baby shower, when someone's getting married, when you got to go to a birthday party and now you got to buy a gift and you don't have money anymore to invest. If you can follow a system where you pay yourself first, where you invest your money and you save your money first, and then you only spend whatever's left, you cut back on your spending if you don't have money to invest, you don't cut back on your investments, now you are truly following a path to build wealth because you're building your wealth before you make everybody else rich. And that's really the true secret to building wealth. And number 15 is you take responsibility for your own situation and your own finances. This one is more of a mental game, but my God, if you do not have a decent mindset, it is going to be impossible for you to become wealthy. I have seen so many smart people, so many educated people who have such a negative attitude towards wealth, success, successful people, that you're constantly just spewing negativity towards the world, towards wealth, towards this idea of investing. How do you ever expect to become wealthy if all you do is hate on other people who have become wealthy? If all you do is hate on this idea of building wealth for yourself because you say it's so hard, it's so difficult, oh, only rich people can do this, oh, this is for greedy people. Well, how do you ever expect to have any sort of financial freedom if you constantly hate on the idea of doing it? If you have a broke mindset, you're going to be broke in your bank account. That's why I keep saying you got to be wealthy in your mindset before you can hit wealth in your bank account. But that requires you now to go out and actually work on that mindset. I don't have a ton of mindset education on my channel, but there's a bunch of people who talk about the value of building a growth mindset, of changing the way that you think. You got to rewire your brain because the way you think is going to impact what you do, and what you do is going to impact what you get. So if you want to change what you get, you got to start by changing what you think, because if you don't have a good mindset, it doesn't matter what you do. Doesn't matter if you have the best recipe towards success, you will never have a chance to become successful. Now, of course, if you do want to stay up to date on what's happening in the top finance and business news, I want to remind you that we have a free newsletter called Market Briefs in my Briefs Media company, where every day my team is working to break down what's happening in things like the housing market, the stock market, the global economy, and our own economy into a fun, witty, and easy-to-read email. The newsletter is completely free, and if you have not joined Market Briefs yet, I got the link for you down in the description below, and you can also go to briefs.co/market. That's briefs.co/market. If you have $1,000 sitting in the bank and you're trying to figure out the best way to grow this $1,000 into $2,000, the best thing for you to do is not put this money into the stock market. I'll show you. See, if you have $1,000 sitting in your savings account right now, you have a few different options of what you can do. Number one is you take this $1,000, you go to the mall and you buy yourself a new watch. That's spending the money, but now this $1,000 is going to slowly go down to zero. So you're essentially throwing this money in the garbage. Yeah, you got a nice watch, but that watch is not going to appreciate in value. It's going to go down in value. Option number two is you can save this money. Now, if you take this $1,000 and you put it into a high-interest savings account that's paying, let's just say 5% in interest, now you're going to generate $50 over the course of a year. Not a ton of money, but better than nothing. It's better than spending that money. But the third option is you can invest this money. And this is where most people think, oh, you can put this money into the stock market, or you can put it into real estate, although you're not going to be able to buy a rental property with $1,000 in today's market. So if you put this money into the stock market, now you're trying to grow this money by 7 to 10% a year. That has been the historical average when you invest your money into the stock market. So let's assume you can get a 10% return on the $1,000 investment. That means you invested $1,000 into the stock market. After 1 year, you are going to make $100 of profit. The problem with that is you don't actually make the $100 until you sell your stock, which means you have to sell it, you got to pay taxes, and then you only get that $1,100, but you no longer have an asset. But then the second problem with that is the $100 isn't a ton of money. It's not going to change your lifestyle either. So now the question is, well, how else can you put this money to work and get a return that's going to make you real wealth, that's going to allow you to make even more money, that we can have more money to invest? Because there's nothing wrong with investing your money into the stock market or the real estate market. I want you to be investing your money into these types of passive assets, but I also want you to build true wealth with these passive assets. Because the way that it works when you invest your money into the stock market is you got to make the money, and then the money you make is going to work to earn you more money. The more money you earn, the more wealth you will build. Because if you make, now instead of $1,000, $100,000, now you can take this $100,000 and put it into the stock market. Well, now a 10% return is $10,000. If you make $1 million and you put this money into the stock market, now a 10% return is $100,000. So you can start to see where that same 10% return starts to become a lot more valuable when you have more dollars to invest. This is why a lot of people say, oh, it takes money to make money. No, that's not true. It takes money to grow your money, but it doesn't take money to make money. And so when it comes to growing your money with these passive assets, stocks and real estate, they are there to grow your money. If you can invest $1,000 a week or $1,000 a month, now you can really start to grow that money, because now you're making money and now you can grow the money, and that's where true wealth is built. I don't want you to stop doing that. That's great. But if you only got $1,000 to invest, what you need to do is figure out how you can take this $1,000 that you have right now and grow it. That way now you can take $1,000 every week or every month and put this money into the stock market. How can you take the $1,000 that you have and multiply it so now you can take $1,000 every month and keep throwing that into the stock market? What can you do with this $1,000 today to make that happen? That's what you need to be figuring out, how you can invest that money today. Because if you just put that $1,000 into the stock market today and you don't touch it, well, yeah, you can grow it a little bit. But remember, the stock market and the real estate market are there to grow the money that you've already worked to create. And if you want to be able to grow your money faster and grow more money, you need more money to invest. And this is where, going back to what I said just a second ago, it's important to remember it takes money to grow your money, but it doesn't take money to start earning that money. If you got $1,000 right now, the question is, how can you take that $1,000 and invest it in a way that's going to earn you more money? And this could be investing this money into your education, or this could be investing your money into your income. Now, the way you invest it into your education is pretty straightforward. Take this $1,000 and now invest it into classes, books, seminars, coaching, something that's going to allow you to earn more money. Now, before you go out and you spend this money, I do want to give you a little bit of caveat, because the last thing that you want to do is just throw this into any sort of class or education or coaching on the internet, and then you find out this wasn't right for you. So start with the free information out there. Go out and watch free YouTube videos, listen to free podcasts, and then start reading some books. You got to kind of progress down this in a more gradual way, because you want to make sure that you're putting this money into something that's going to actually drive you and deliver you some value. So start with the free content, YouTube, podcasts, blogs. See what it is that you want to learn more about. Maybe you want to build a personal brand. Maybe you want to build your own business. Maybe you want to get a certificate in data science. I don't know. You figure out where it is that you want to invest more of your time and your money, and then you take it one step further. Before you go out and you spend that $1,000 on some expensive coaching or some expensive class, go out and buy a couple books. Spend $50 and go buy as many books as you can on that topic, and then read it. If you don't read it, well then, what makes you think that you're going to now get a better return by buying a class that takes even more work and more action on your part? If you can't read the book, you're not going to be willing to put in the work on the more intense and work ethic stuff. So now go buy a couple books, spend $50 buying a couple of books or a few books on whatever that topic is, and then read them. And if after those books you are still interested and you're still and excited about this thing, that's where now you can start investing more of this money into your education. Now you can look at classes, coaching, seminars, whatever it is, conferences. Look into ways to keep expanding your knowledge, but also doing something on this topic. If it's building your personal brand, you better keep making content. If it's building your data science certificate, well, then you got to start working to get that certificate and figure out what you can do with that certificate. If it's building your own business, then you got to start thinking of business ideas and you got to start implementing it. And this is where now what you're doing is you're investing in your brain, because if you can invest $1,000 into learning how you can earn more money, well, now that's where now you're working to earn more money, so you have more money to invest. Remember, the key with earning money is not to buy a faster car. The key with earning money is to own more assets, so your assets can buy you the faster car. You want to make money to own more cash flow, because the cash flow can then fund your lifestyle. And I want you to have whatever nice stuff that you want. I'm not saying don't buy a nice car. I'm not saying don't have a big home. I'm not saying don't have the luxury designer stuff. I'm saying afford it first. And if you really want to be able to afford it and be completely financial free, that means you're using your assets to pay for it for you. You're not working to earn money to buy the nice car. You're working to own assets that pay for the nice car. The alternative thing that you can do is you can invest this money into your own business idea. If you want to work to build your personal brand, then maybe you go out and buy a camera, or you go out and buy some lights. But I do want to caution you with this as well, because most of the time, 99% of the time, you can go out and get started and start building your business, your brand, your product with very little amounts of money. I started my Minority Mindset show, this entire YouTube channel, with less than $500. And I say $500 to be very gracious, but I know it was significantly less than that. I didn't have a fancy camera when I got started. I didn't have fancy lighting when I got started. I had my cell phone, my iPhone that I had, and then I had a tripod that I bought off of Amazon. I think I paid $25 for the tripod, and that was it. I don't have any fancy microphones. I don't have any fancy editing equipment. I don't have anything. I used my $25 tripod. I think I might have bought a $25 light as well. So maybe let's just say $50 or $60 to get started with the equipment. I recorded the videos off of my cell phone with no mic or anything, and then I edited it on the free editing software that my computer had, and then I uploaded it to YouTube. And I kept doing that until I started to get more views and started to get some revenue. And then when I got some revenue, that's when I bought my first camera. And that's when I bought my first lights. And then I went out and bought my first microphone. And that was a tough purchase because microphones are expensive. But it wasn't until I started making money that I started really spending money. And this is a mindset you really have to shift, because most people assume, oh man, I can't go out and do this because everybody's got all this fancy stuff and everyone's spending all this money on advertising and this and that to get started. Well, the reality is you don't need a ton of money to get started. It's not the tool set that you lack, it's the mindset. And this is where your mindset is really going to determine what trajectory that you're going to have in business and your income. Because if you want everything today and you're not willing to put in the hustle and the work to get it, well, it's going to be extremely difficult for you to actually put in the reps to get the success, because building business is hard. Building a business takes time. Building a business takes effort. Building a business takes risk. It took me a long time to build my brand on the Minority Mindset show. And then I had to figure out, how can I build a business? Because I am an entrepreneur. I didn't really just want to be a creator. I've always had this entrepreneurial mind where I want to be a business owner and I want to run a company, because that's something that I enjoy. Not everybody wants to do that. And so I would try a lot of different things. And I was running businesses before the Minority Mindset show, and I was investing in real estate before. But for me now, I'm building this content. This is fun. It was a hobby at first, but then I wanted to turn it into a business because I was spending so much time into creating this personal brand. So first I started with building a blog, which failed. And then I had the idea to build the Briefs media brand. Now again, if you wanted to go out and start a media company, generally it would cost a ton of money. And most people have to then go out and either raise debt, or you go out and raise investment capital, venture capital from investors. But I was able to self-fund it because now I could take the revenue that I was making from my YouTube brand, my personal brand, and funnel that here into the Briefs Media brand. And then we were able to grow Briefs Media from a free newsletter to then our whole other platform of things that we're working to build. But all these things were like baby steps that built on top of one another. And even before the YouTube channel, I was doing so many things before I got to YouTube. And so now the question is, how can you now start taking action? And the difficult part here is a lot of people assume that you have to be perfect. You have to find the right thing. You have to find the right idea. You have to find the perfect item to do. But that's not how it works. Perfection can be the enemy of great. And this is where now the key is you just got to get started. And if you do something that you no longer want to do, you can always pivot. But I guarantee you're going to learn something. I started off in event planning. That was my first business. Then I got into real estate. By real estate, I don't just mean investing in real estate. I was doing that. But I also got my real estate salesperson's license. I also became a real estate wholesaler. Then I got onto the internet. I started selling on Amazon. Then I started my own e-commerce store. And after that, after doing all this and investing in real estate, I then got on the internet with my YouTube channel. And so it's progressions. You got to figure out what kind of path you can take and what is going to be right for you. And what's right for you is going to evolve, but you got to get started and you got to just keep putting in the reps, and you can't keep just trying to be perfect, because if you're constantly just trying to find the right thing to do, you're going to be waiting forever. And this is where you just got to get started. You're going to learn along the way, but you got to start putting in action. So if you got the $1,000, the question is now, how can you take the $1,000 and turn it into something that's going to pay you at least $1,000 a month that you can invest into the stock market or into some other asset class? That way now you can continue to build that wealth. But you have to figure out how you can grow that first $1,000 in the first place. Do you want to know how wealthy people organize their finances? Here's a hint. They don't just keep all their cash in one bank account. I'll show you. What wealthy people do is they have designated money for spending, they have designated money to be invested, and they have designated money to be saved for an emergency. They know what every dollar they earn is going to do. They build a system. I'm working to earn this amount of money, and then out of this amount of money, some of it is going to be spent, some of it is going to be invested, some of it is going to be saved. And the reason why is because they have built a financial plan. They've already built the financial models to know, if I invest $1,000 a month or $500 a month or whatever the amount of money is, I'm going to be able to hit my financial goals. But in order to get there, you have to start by at least organizing your money. And the simplest thing you can do to do this is you got to just figure out where your money is going. And this one is a little bit difficult, but it is so necessary for every single person. You have to track your money. In business, we say if you cannot track it, you cannot optimize it. It's the exact same with your personal finances. So what I want you to do is take a piece of paper, take a Google sheet, I don't care, and you want to write down on the top how much money you're making. How much money did you make last month? I don't care if it's from your business, from your investments, your job. Write down where your money came from and write down how much money you made from your income, from your job, from your business, from your investments. Write that down at the top. Then below that, you want to write down your expenses. And you want to spend a little bit of time doing this. This is going to take time. Take out your credit card statements, take out your debit card statements, take out your bank account statements, and see where all of your money went, and then categorize them by groceries, by your housing costs, by your vehicle costs. Categorize them and write down every single expense. You need to know where every penny went. And then below that, write the other places where your money went. Did you invest any money? If so, how much and where? Did you save any money? If so, how much and where? Did you give any money to charity? If so, how much and where? Now when you do this, you're going to see a clear picture of how much money you're earning, how much money you're spending, how much money you're saving, how much money you're investing. Now, if you're not saving or investing any money, well, that's already a big red flag right there. And if your expenses are higher than your income, that's another huge red flag. And so now what you're going to see is, where is your money going? And immediately, I don't have to tell you what to do here. You're going to immediately be able to make adjustments in your finances, because your money is going to be staring right back at you and saying, whoa, whoa, whoa. You're spending too much money at restaurants. You're spending too much money on airline tickets. You're spending too much money on travel. And if you're not tracking your money, you are never going to have a chance to become wealthy, because you can't even see where your money is going. So that's the first step, is you got to track where your money is going. The second thing you want to do now is you have to open up at least 3 different bank accounts. And most banks are going to let you do this for free. If your bank is charging you, go out and find a new bank. You don't want to pay for your banking services, but you want to open 3 different bank accounts. And when you earn money, if you're getting paid a salary from your job, or if your business is paying you a salary, this money needs to go into one checkings account. And then out of that checkings account, you want money to automatically be pulled out and put into your other 2 bank accounts. Because your bank account number 1 is your spending money. Bank account number 2 is going to be your investing money. And bank account number 3 needs to be your savings money. Now, the amount of money that you save is going to depend on where you are financially. I generally say somewhere between 3 to 12 months worth of expenses. You got to find the right number for you. I'm not a financial advisor. Everything that I say is for educational purposes only, so make sure you understand that. But generally, 3 to 12 months worth of expenses is going to be enough for people regardless of where you are in your life. So if you're 23 years old, you're just out of college, you don't got any financial liabilities, you don't got a lot of responsibilities, maybe you only need a few months worth of expenses saved up. If you're 45, you got kids, you got responsibilities, you got liabilities, maybe you need 6, 9, or 12 months worth of expenses depending on your risk tolerance. So you got to work to build up the savings depending on where you are financially. Your second bank account, which is your investing money, this is where your wealth is built. And the thing that you want to understand about this is there are ways for you to automatically actually invest your money. And then there are places where you just want to keep this cash waiting for a good investment opportunity. And this is going to depend on you, because I personally like both. I have a system where money is automatically invested. Every Wednesday, I have cash that's leaving my checkings account that gets invested into the stock market. I'm investing into different asset classes, like even physical gold, every month. But let's talk about the stock market. Every Wednesday, cash is pulled out of my checkings account and is automatically invested into the stock market. Whether the market's up or down, it does not matter. But I also am putting money into my investment account, my bank account, that's cash waiting to be invested, where I'm looking for a good investment opportunity. Now, this could be stocks, this could be real estate, this could be buying a business, this could be really anything. I'm just looking for a good investment opportunity because I am an investor. I like investing. This is something that I personally like doing, and I want to spend the time in that, and I also understand the risks. And so now you got to understand, what type of investor are you? But the key is you have to separate the spending and the investing and the saving. And the reason why is because when you have all of your money in one bank account, it's very easy to just spend that money, because most of us have this net zero mindset, because we assume if I got $1,000 in my bank, I can spend $1,000. But to prevent that from happening is you want this money automatically put into your investing cash account and your savings account, because now when you don't see that money in your spending account, you're not going to be able to spend it because there's no money there for you to spend. And this is going to make it a lot easier now for you to figure out what can you actually afford. Because when you are working to just spend money and then you invest whatever's left, you are never going to have a chance to become wealthy, because you're prioritizing making everybody else rich. When you're working to spend money, when you're working to buy a nice car, when you're working to buy a big home, when you're working to buy the nice clothes, you're working to make everybody else rich. But when you're working to buy more investments, when you're working to buy more assets, now you are working to make yourself rich. But this requires you now to change the way that you organize your finances. And that's why, at the very least, go out and create 3 different bank accounts. Now, a simple rule of thumb that you can follow is 75, 15, 10, which says for every dollar that you earn, 75 cents is the maximum that you can spend. 15 cents is the minimum that you're investing. 10 cents is the minimum that you're saving. And now many banks will allow you to build an automatic withdrawal and deposit into these bank accounts. So if you know that you're going to make $1,000 every 2 weeks, you can take $150 and put it into your investment account, and put $100 into your savings account every 2 weeks. And you can automate this through your bank. That way now you don't accidentally spend your investment money on a brand new TV. That's the first thing. The next thing you want to do if you want to really organize your finances is you got to organize your investments. And that means now you got to figure out what is your investing strategy. Like what I was talking about just a couple minutes ago, when it comes to investing your money, you can be more of a passive investor, or you can be more of an active investor, or it could be a hybrid of both. I am a hybrid of both. I invest my money in 5 places. I invest my money into my own business, Briefs Media, along with other companies. I invest my money into physical real estate. I invest my money into the stock market. I invest my money into cryptocurrency. And I invest my money into physical gold. Now, I don't recommend what I do to anybody else, but this is my strategy. Some of these are passive. Some of these are active, like my real estate investments are active. I have to go out and find rental properties. I have to go out and find good investment deals, and then I go out and I invest in it when I feel like it's a good price in a good area in a growing neighborhood. That's what I'm looking for. When it's the stock market, I have a passive strategy, but I also have an active strategy in the stock market as well. If I see a great investment opportunity in the stock market, maybe it's a great company that has just been hit hard by the economy or by something else going on in the market. Well, now I can go out and buy this company that I believe is a good investment and buy it. But beyond that, I have my passive strategy, which is every Wednesday, I have cash leaving my account and it's automatically being invested. And this is whether the market's up or whether the market's down. It does not matter. I'm always, no matter what, contributing to my investing. Now, the key here is you have to figure out what are you prioritizing. Are you going to prioritize your investing or are you going to prioritize your spending? Because most Americans, and I'm not saying this generally, I'm saying this statistically, most Americans prioritize their spending. Meaning, when something comes up in life, let's just say your friends want to go on a vacation, or somebody's having a baby, or somebody's having a wedding. What are you going to do? Are you going to prioritize paying for that gift or paying for that event? Or are you going to prioritize investing that money first? And if you really want to become wealthy, you have to prioritize building your wealth first. Which means sometimes you got to make some sacrifices. And you got to figure out which sacrifices you're willing to make. Maybe you got to downsize your car. Maybe you got to downsize your home. Maybe you got to downsize how many times you're going to eat out a week. Maybe you're going to downsize your clothes. You got to downsize something in order to make the ability to keep investing your money. And as you're doing that, the next thing you want to do is work to earn more money. Now, the reason why you want to work to earn more money isn't so you can drive a faster car. It's so you can own more assets, which will buy you that faster car. That is the key, because what wealthy people are doing is wealthy people are living off of their investments. They're not living off of the money they're working to earn. When you work hard to earn money and then you spend that hard-earned money, you are working hard to make everybody else rich. But when you work to earn money and then you take this hard-earned money and then you buy assets, you are working hard to make yourself rich. Now, these assets are going to be working to earn you more money, because if you own cash flow producing assets like dividend paying stocks or rental properties, now these assets are working hard to pay you. And if you can live off of this cash flow that your assets produce, now you are financially wealthy. Now the tough part is, this is hard. This is difficult. This is going to require you to make some sacrifices, because if you want to live off of your assets, it's going to take a lot of work. And this is why I call it a decade of sacrifice. It's going to take you a lot of time to see any real significant income from your cash flow producing assets. But if you keep putting money into these cash flow producing assets week after week, month after month, year after year, and you do this for a decade, after 10 years, I guarantee you're going to be able to have some significant income from your cash flow producing assets. But it's going to take you a decade. But if you can do that, now you have a whole new stream of income which can fund a big chunk of your lifestyle. But it requires you to start making that sacrifice today. Because what wealthy people are doing is, number one, they have organized their finances so every dollar that they earn has a job. Some of this money is going to be spent. Some of this money is going to be invested. Some of this money is going to be saved. The more money you put towards your investments, the wealthier you will become. Now, as you're investing your money, the second question is, how do you invest this money? Do you want to be more of an active investor or more of a passive investor? Then it's, now as you're investing your money, how can you use the income from your investments? Because true financial freedom comes from when your assets can pay for your lifestyle, but that's going to require you to put in that work now, to own the assets, to make the sacrifices, build the cash flow, and then start to live off the cash flow. And this is sacrifice after sacrifice. But if you can do this, now you're going to build that true financial wealth, that true financial freedom that most people only dream of. Your 20s are a time when you first start making money, and it's very common and normal to be dumb with your money because, well, it's the first time you ever make money. So now you want to go out and buy the nice things. You want to start spending money. You want to start going on vacation. You want to start buying a nice apartment. You want to get a nice car, and you want to just start exploring and enjoying life because you're finally out of school and you're finally making some money.